Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Barty. How we doing in YouTube? Thanks, Dan. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. This stream is based on structured trades, uh, integrating bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. Uh, the idea of the Trader Lab, and it's open to everyone at no cost, is to help traders understand the business of trading, how the market works, why it does what it does, and how you can develop a business plan or trade plan to actually navigate the market. It's very important to understand for developing traders that the market is not a mechanical process, it is an auction-based process. The function of the market, and the reason we have markets, is for participants to come together and basically discover what is too high, what is too low, and what's just right. And this process represents itself in rotational behavior. And even if we're in a trend, the market still rotates. And if you understand market mechanics, you'll get a sense of what these possibilities are. And then, based on certain conditional definitions, you'll be able to define a condition that exists and also potentially define when the condition is changing. And then, based on your personal trade plan, you would then potentially shift your trade to specific structured trades that you have vetted that have a statistical edge that are in alignment with that developing context or condition. That's the basis of the Trader Lab. And like everything, you have to do the work and discover where your structured trades lie and develop the discipline to accept the random outcome of any time you interact with the other market participants, and also have the discipline to act accordingly based on your plan so you can derive that statistical edge and potentially extract dollars from the other side. And the very basic idea of this is that if we're in a 100% random environment where there's no prediction about what will happen, no confirmation, and I'm not saying you have to accept this, but human nature and our psychological needs are to strive for confirmation and certainty in an environment that's 100% random. And our business model is gaming, or how casinos operate. They just play games with an edge. They don't control the cards coming out of the deck or how gamblers play the cards. So they're in a 100% random environment also. So their solution is to only play games that have an edge that favors them, even though the outcome of the next hand or even the one after is completely random. By executing a plan that has a statistical edge, that is how over time they extract dollars from the gamblers. And even though they have to pay the gamblers, because all businesses have overhead and costs of production. If that makes sense to you, then you might want to visit the Trader Lab. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So please remember, this is not a trade calling room, but if we get into real time, we'll talk. This stream is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. There is no cost for this, and there is a link in the bottom of YouTube if you're inclined. These are broad strokes. These are not trade recommendations. These are structured trades that you can use as a template. Then you need to reverse engineer them, see where they fit. And also, I would suggest, if you want to get an understanding of what you see me do here in the stream every day, is to come to the Bookmap Discord Trader Lab community. There's no such thing as plug and play. You actually have to learn market mechanics, and it's not based on um, indicators, though you can use indicators. This is primarily based on the auction, and then indicators really just follow the market around. So let's get into what I have for you today. I'm going to be showing you some interesting things, I hope, and hopefully I'll be able to show them to you without making big trouble. This is the day before yesterday's behavior. And remember, we said 52.51 was a week low, and our targeting was to get under here, 51.4675, and potentially get down to this price, which is around 51.10. So this is, and we had a gap yesterday, as you might remember. We'll talk about that. And then it was shorts only yesterday. And many traders in Trader Lab had a very productive day. Now let's go forward. This is yesterday's behavior. So let's look at where we went. We gapped. So we took out that low. We took out this low. We tested it, rejected it, and we got our stops under here. We got our stops under here, which is our targeting. And we were trying, this was our outside target, was basically down around 8 or 10, right in here. So we got pretty close. To me, this is like horseshoes and hand grenades. Also, this is a low volume area, and the market tends to come back into this. It didn't do it. It got to the edge. What that means is we found too low. And there's another thing. We had our short covering coming into the close. So that's yesterday. And a very nice day, shorts only. Now, this is this morning. Now, this is the RTH, and this is right at the RTH open. This is RTH only. You remember I showed you that this was a unauctioned area, and this is from Wednesday last week. So the market had auctioned too high, too low. This was the retail price in here. And then we fell away and created a low volume zone. This is the auction. This line was the fair price or retail price in this auction. So the shoppers or participants up in here said, yeah, we'll do business here. But what happens if that price is too high? We leave it, and then we rip away, and then we start a new auction, just so you know what you're looking at. And then there's other aspects to this. But now the retail price shifts lower. So this now is fair. This is not auctioned, and this is unfair. Now we come to Thursday. We know this was unfair. The high of the day on Thursday is there. Too high. I'm not paying that. Into the low volume zone, because it wasn't auctioned. And then we just rotate. Thursday. Inside day. Fill in the volume. Now what? Yesterday, gap. So here we have our gap low and the potential to come back here. Now there's another target sitting up in here, 5,300 and 5324-ish, 23 is here. These are our targets. Now this is posted right at RTH open, okay? So this is where we're going today. And there's more. Really? Yeah, there is. One more little piece and we'll get going, maybe. Let's see if we can do this. Now, this was posted at 7:59 a.m. Central Time. Good morning. And I was responding to a question. What's most important is 5,300 and the naked V-punk, but that's voice to text above us. The market goes up to go down, and the market goes down to go up, and the market is short. And we have a consolidation that we broke out of from last Thursday and yesterday's ETH. And now we have returned back to the upside, and we have a potential gap to fill, take out the weak shorts, and then we have to see how far back we come. So we have 5,300 and we have 5323 or so, the naked VPOC. This is what I just pointed out to you above us. So just keep that in mind. Don't get overly bearish. Just trade your plan and be patient. Remember, this is not gambling. This is not FOMO. This is waiting and then performing when your vetted trade shows up, it is possible today that the ranges may contract, and I would be conscious of potentially two-sided trading and squeezing. Of course, not a recommendation. We have to see what comes up. This is the Trader Lab chat. This is what is going on. And there's a lot of interaction, charts posted, mutual support, and you're all welcome to Trader Lab. There's no cost for this. You can use, there's someone posted their trade plan for today. And then I chime in along the way, as do others. Okay? Levels to observe, what's going on. All this is available to you at no cost in the Trader Lab, plus that library of webinars I always talk about. Let me just show it to you, and then I'm going to get into these trades. These are going to be structured trades. Thanks, Ned, for posting this. Start with the primer webinar. It's got about 33,000 views-ish. It gives you a high-level overview of what this is all about. Meet the Trader Lab. This is advanced trader education. You don't have to be an advanced trader, but I'm going to tell you this is not what's typically out in the retail space. I've been trading going on 46 years, both professionally and otherwise. I've walked in your shoes. That's all I can tell you. Been there, done that. Watch this for just an overview of the entire process, like a day in the life. I planned, I saw, I traded. And then there's some others here. Why most traders using indicators fail, and are you trapped in Trader Groundhog Day? Trader Groundhog Day is working hard, having winners, and still not moving the ball forward. Why is that? Gamblers have winners, but if they don't have an edge, they're still, over time, going to donate their dollars to the house who does have an edge. Hope that makes sense. Please give a like, and don't forget to use the link in the bottom of YouTube if you're inclined. This is called the overnight volume point of control. In the ETH, this is the highest volume. And let's remember, trading is shopping. So it's what's too high, what's too low, what's retail, or what is just right. One moment, please. I got to adjust my investor RT. Change a little setting here to get these lines off my Bookmap. These high volume and low volume things, they're in real time. And I'm going back to the beginning. If you have questions, please post them. Dan, is there a problem with Discord, guys? Hold on one second in YouTube. Let me see if I can fix this up. You know, Dan, it's not giving me the choice to pick screens. It's only giving me applications in Discord. Dan, can you help me out with that? I don't know if you're getting my screen or not, guys. Can you confirm Discord? I'm using the app, Dan. And no, then I don't know what the problem is. Okay, sorry about that, guys. I have to just go continue in YouTube. I do not know what the problem is here. Sorry about that, everybody. Okay, I cannot tell if I'm streaming in Discord. So, guys, if it's not working, go over to YouTube. Use the link. All right, sorry about that. Okay, ETH, volume point of control, is our retail price. If it's too low, and we don't know that, if we come down to it and we check it, this is a structured trade potentially in the Bookmap Trader Lab. This is a structured trade. Now, there's a couple other things we need to know. Yesterday's retail price, the naked volume point of control. Now, this is all ETH. This is what sets us up. We have yesterday's auction. This is the retail price. Remember, shopping experience. What did we do in the ETH? All this is before the market opens. The ETH low tested the fair price from yesterday. And what's fair? Think of your supermarket or your store down the street. Wherever the high volume takes place is where buyers and sellers agree to do business. They perceive that as a fair price. Now, this concept is auction based or auction market theory. If we find a price that is retail yesterday, and then in the ETH, we check it, the ETH low, and now the perception of value has changed. This is too low, and we reject it. That is suggesting potentially 5,300. Now, what do we do next? The market opens higher, way above settlement, wherever that is. There's yesterday's low, I should say. So we're inside a range. We tested yesterday's retail price. It lost settlement. It must be covered up by something. Guys, where's settlement? Let me see if I can find it. 5184.85. Okay. So settlement is actually right here. So it's covered up. So we open above settlement. So that's a gap. And now in the ETH, an internal gap, I should say. This is the retail price. So too low, open higher, retail, retail. So if this is too low from yesterday, and this is the retail price in the ETH, and I open higher and I test it and it's too low, what do you see similar? Too low, no precision, hasta la vista. Where's the stops over yesterday's high? What else is there? The gap. All of this is what I just showed you in the Discord. And then there's this, and then there's this. These are our targets, 23, 24, and 5,300. Now you know the lay of the land. So what is the situation? Longs. Why? The market goes up to go down, and the market goes down to go up. Dan, it's not giving me a way. Discord's not showing me where I can select screens. It's not letting me select it. It's not showing up. So I don't know what that is all about. So this is the first long. Let me show you to you. This is a specific configuration. It's a structured trade. And of course, there's nothing mechanical in trading. It is all behavioral. It's up to you naturally. None of these are trade recommendations, but the Trader Lab is the business of trading, not the fantasy. So this is our retail price from the ETH. This is where the volume is. The market opens higher. This now is, and it starts at 0 at the RTH open. So right here, this is the developing volume point of control. Follow the yellow brick road. I made this up many, many years ago. When I mean made it up, I observed behavior, and it was not anything that I had ever heard of before or ever seen. I didn't know what it was. I had learned market profile from the guy who created it, Peter Stottlemyre, and I learned it in 1985, I think it was. And I couldn't trade with it because it just, I still was using indicators back then. So I thought I would plug this in and use it with my indicators. And all I did was throw gasoline on the non-performing fire. In other words, more randomness, more conflict, and it didn't change the outcome. Still had my winners, still had my losers, and even with sequence of winners and winning weeks and even winning months, I still was going in the wrong direction, and I was always trying to fix it. That's Trader Groundhog Day. So this is too high. Here's how we know. Break, test. I'm not paying that, right? Language of the market. And what about this? Maybe it's too low. I don't know. Do you? Nope. Variable high volume node. And now remember, this starts at 0. So as we auction and put in volume, like here, it's a consolidation. There's volume here. But when we're moving away, where's the volume? It's not anywhere. We're directional. When we stop being directional, we get into consolidation. Now, is the trend up or down? Well, higher time frame, it's down. Short time frame, what does the market do? The market goes down to go up. So right here, I get VPOC migration. Now let's look very carefully. What does it say? Remember, this is language. This is a foreign language. And when you use your indicators, you're using a Google Translate. It's translating price action. Oh, wonderful. However, indicators do not take into consideration the condition of the market or what the language of the market is. They just follow price around. So your indicator might have said get short here. But what I know is everything below is maybe too low. And maybe this is my target to look for a long. So right here, I have liquidity here. Who knows? I have liquidity here. Who knows? I have sell stops coming out, buying icebergs, liquidity, VPOC migration. What this says, this is the new retail price. I rotate the VWAP. Now, if I want to be short, so you know, if I sell this, which I can't, why? Because I can't react here. I'm human. So this would be a potential short to there, and then potentially to there or there. I'm just telling you. Now, as I posted and I showed you, there are no shorts for me today. It's longs. So I look at the context as number one. I do not trade mechanically. I trade the targets based on the auction. What do I know? This is maybe too low. And the best I got on this is maybe to come here. And when I say the best, statistically, nobody knows what the outcome will be. So this is the retail price. This is a structured short, not qualified in my plan, but it might be in yours. But look what happens here. So I know in the micro structure, I've got my buyers here. I've got buying icebergs. I have liquidity. And what's going on here? The buyers. So the sellers are here. The buyers are here and here. The sellers, remember, are there. I break above the sellers. There's aggressors. I hit the VWAP, which again is a potential rotation and maybe out the bottom. Nobody is clairvoyant yet. And this is support, and then this is support. So that's the first consideration. Now, either we come under these buyers, or here's the other side of it. The sellers are here, the buyers are here, the aggressors are there, and I know I got buyers here because the buyers took over. So the idea is if I got buyers here, if I come back around, are these buyers who thought this was a heck of a deal, are they going to show up again? Or are we going to take them out, get the stops, and come down here? So I have a long down here, and subject to what happens right here, I can have a long, and I have to scale here. Let's look. VPOC migration. This is saying, in the language of the market, too low. No clue. Now I got more volume up here than down here. What is this? It's my new retail price. I'm going to mark it. This is the auction. Now I'm going to go. I go slow in the beginning because once you see this, you'll kind of get a sense of what's going on. And this is called trading in fractals. So I'm looking at isolating auctions, which is too low, too high, too low, too high, boom, too low. This is a mini auction. This is a mini volume point of control. And it shifts right there. It doesn't have to shift there. But what I know is this is too high. This is the new retail price. This is too low. So I got support and I got resistance. And I'm in a squeeze, right? Notice the behavior. This is my scale. So my long is from there, structured trade, or from there, structured trade, back to here. And then what do I got? ETH high, high probability. Yesterday's high, over an 85% probability we take out either yesterday's high or low. Who knows? And the gap. And 5,300. This target. And then maybe 24, right? So all this is in the trade plan. So let's watch. VPOC migration, long, resistance, scale, 5250. Don't ask me why. And then we've had liquidity sitting at 5,300 all day, or all morning, I should say. Let's see if it's still here. Where'd it go? Was there. I think it's there, but this has got more liquidity and we're not going to see it. I can't say for sure. I'm not going to worry about it. Actually, I am going to worry about this. Well, we'll come back to that, all right? Let's just get back here. So it's longs only, and we have over 90% probability of taking out either the ETH high or low, 85% probability of squeezeteria, and then into the gap, okay? So it's longs only unless you have a plan that says something else. So let's watch. Where's too low? Down here. Variable high volume node. Long, and we're going for this. Don't forget. Market breaks under here. Support is here. And the opening swing low is down here. Support's here. So if we pick stops off the opening swing low, if we did, and apparently I don't think we did, if we picked them and we got down here, then we would still be going for longs. So here, it looks like we didn't do it. This comes down. That says too high. Right in here, when you get the break back above, we test, and the buyers are here. Why is this important? The sellers got absorbed here, and you got your buyers. Remember? Where's support? Where were my buyers active? Here. These guys are absorbed. The buyers are above them. So what I'm seeing is I still got my buyers here. My buyers are here. Here's my resistance. If you take any longs in here, you're trying to come back here. There. You got a scale in front of it. And then we're still on the gravy train, maybe. And it's rotational. That's the other thing about this condition. It's rotational. We pull back to what? The retail price. Then where are we going? Potentially here. Structured trade, statistically based. This is the Trader Lab. 85% probability, not a recommendation. We got to watch this here. This, by the way, is advanced methodology. Not really going to get much into it today. It's another long Trader Lab. Now what? Gap. So we're looking for the gap fill. I'm going to show you a couple other little trades, and then and all these are longs. I see we're coming up to our target at 53.23.24, right? This, what's this? Too high. Let's label it. And yesterday's high. What do we got? A gap. Okay. So all this is Trader Lab guides. By the way, if you have questions, post them. Is this level correct? Can't say. Don't have time. So too low. Resistance is here. You get long against this. You could. Resistance. Too high. Scale. And then, right? Continuation. Why? Gap. Watch. And we're going for 5,300, don't forget. So we have the gap and we have 53. It's all on the price chart. So for me, there have been no shorts. VPOC migration, notice something consistent. What do we do? New retail price. What's this? New retail price. Where are we going? Here. Trade can be done here. VPOC migration. Target. I think we're going to be pretty caught up here, right? Is there news out, by the way? So remember, primary target, and this is what you call tertiary, this one. That's the plan for the day. It doesn't mean we won't keep going. Anything can happen. So that's our target. For me, the longs are done. So that would be it. And there's quite a nice package of trades in there. This is Trader Lab process. Nobody picks the high, nobody picks the low unless you fall over it by accident, and that's about what it typically is. The idea of Trader Lab is to trade with statistical probabilities with a vetted structured trade plan. When you come to the market, you know what you will do before it happens because you're not going to predict. You're going to know if you learn it and do the work where the probabilities are. Has the condition of the market changed after yesterday? And then once we see the condition of the market, we have to think about where's the fuel. Okay? Remember the story. Now, this is very important. Also, we have stopped sitting up here at 60.75. There's nothing saying we can't keep going. Absolutely nothing. So we just have to follow the yellow brick road. You could be done because your primary targets have been hit, or you have a plan to trade this. And for me, I would just as well be done with it. It doesn't matter to me. But that's me. I just trade my plan and then I sit in the Barca lounger. The other thing is, if you're a more, I trade for the big moves. And that's just me because if I put risk on, I like getting paid. I'm not going to risk 3 points or whatever it is to make 2.5 or 3 points. That's not the business for me. So in the Trader Lab, everybody figures out their edge or their groove. There are traders who are going to trade both sides of this. You know, get long, take a short, trade the counter rotation, go to get long again. For me, I trade long. I exit on the counter rotation, not a recommendation. And then I look for the rotation down if I think I want to get long again for the rotation back to check. Is this microstructure too high? Let's look in micro together. If you have questions, post them. In fact, before I go into this microstructure for you, because what I'm going to show you is really trading in fractals. A fractal is this. A fractal is not time-based. It is behavioral. What's happening here, and then I'm going to come up. Look at the alignment. Number one. This is the micro high volume right there. In a higher time frame, the high volume is there. This was created from the last time we were up here. In this fractal, treat it like its own little day. What happened here? The sellers took control right here. Now the trend is up. So let's just watch behavior and see if we can figure out what might happen and where. What happened here? Here's what happened here. Sellers are here. There's your icebergs. Buyers are right here. See them? When I break below, the sellers have taken over. When I rotate, and this is a sell sweep, when I rotate back to the volume, that is microstructure resistance. Now, again, I don't take shorts. You can. Why? I got a squeeze going on, and who can pick the high of the day? You've got that gift. Come to Trader Lab. Help me out because I have never been able to do it. And I decided many years ago My job is not to do that. My job is to align. But here's what I know right here. Sellers took control in this auction. I know that these sellers are active here. So I know the possibility, and this is not a recommendation, this would be counter trend, right, is to rotate back here. But it's not a trade that is qualified for me. Under different conditions, this would be a short. Currently, it is not because the context is up. So let's see what it does. This is how you need to differentiate what is qualified in your trade plan and what isn't. Now, the market can come back here. So I know there's two possibilities. What side is advancing? Think of it in our time frame right now. The buyers are advancing. What do I know about this? We found some sellers. Are the buyers going to take advantage of counter rotations for continuation longs? Or have we run out of buyers, hit our target, and who knows, and now return here? This is the question. And I don't have the answer, except my trade plan says, let's stay with the longs and use the shorts as exits. Are you guys following? So Discord is working again, is that right? So let's watch the behavior here. Remember, sellers are here. Sweep is here, which suggests the rotation. If I was going to take a short, if it's here and my stop is here, and it's really what we call the Hail Mary pass because it's counter trend. I tend not to trade counter trend unless the condition warrants it. And it doesn't mean we won't come here because this would be the target. So we'll see. So if I have a counter trend plan, which maybe I do, maybe I don't, and subject to what I'm doing, I'd either be done with my longs or I'd take a short here. And I say I could do either because this is a counter trend structured trade. But if you trade counter trend, you are then getting aligned with the weak side, and you have to decide, do you have an edge to trade counter trend, or is your edge to look for outside rotations to come back to the mean? It's called mean reversion. So a short from here is mean reversion, or if the trend is up, outside is mean reversion back here. These are the same thing. Think Russian dolls. This little high volume in this auction is only specific to this auction, this here. If this price becomes too high, and the interesting thing is it's aligned with that, then we can come back here. This is the developing highest volume for the full day. So far, this is where the retail price is. If in the microstructure, this is too high, and you notice where we're testing, then we can come back to the next higher time frame, as you think of it, over here. If this is only a counter rotation, we might only come outside, pick some stops off, if we do, and then return here. So it's what's too low, back to retail. If retail is too high, back to retail over here. Making you crazy? Hope not. This is trading the auction. You can slice and dice this thing down, but here's the thing about counter trend in the current condition. How do we pick the high of the day? Well, if you can't, then you have to be aware of what the language of the market is. We have returned to what was a price that became unfair. We went down, we found too low, and now we've come all the way back to what was unfair. And this is a higher time frame. And we can keep going. So for me, I don't take shorts. but I might use this for trade management if it's in my plan. So let's see what it does. The high volume is here. This is the retail price in this. Now, what's in fractal? Think Russian dolls. You know how they fit inside each other, Matryoshka dolls? Trading is trading in Matryoshka dolls, so fractals. I don't use time, so it's a fractal. So how long does it take for the participants to vote, if you will, on what's too high and the buyers were here? And if that's too high, my sellers are there, and I break away, then possibly my sellers are here, my sellers are now here, and my sellers are going to be here and here. If the buyers consume the sellers, we continue along. If I can't get above this, then I'm going to get more profit taking and potential here. That's what I know. That's all I know. That's all I need to know. And I can't know anything further. I do know the trend is up. I do know we're squeezing the shorts. I do know that I had some aggressive buying over here. And I do know I'm holding a tight consolidation and that this might just be profit taking and location. You got questions, guys? Dustin, this naked VPOC is not currently valid unless we break from here. In other words, if we reverse out of here and go south of the border, then it would be important to me. But if we just keep chugging along after this little rest, then no, it's not going to be important. This is still important, and we are above it. So this is really kind of we get through here, then we have to look higher up or something. And we have fuel sitting up here. So that's kind of what we got. So this is really important. And there's no precision, you know. Precision doesn't exist in this. This is not engineering or accounting. There's a lot of slop in trading. So locations are areas of behavior, not so that's why this is the auction. It's an area of behavior. The overnight low tested this. It's an area of behavior. This sets up all the longs. You see this and this, of course. And then squeeze, target, and then maybe more squeeze or maybe not. So this is a key location for counter rotation, and maybe that's all it's got. Don't know. The outside edge is out here. If we don't come out here, that's still rather buoyant. So let's watch. Okay. How we doing in YouTube? Please give a like if you're liking this and you're getting some value. And how we doing in Discord? If you're visiting in YouTube, don't forget you can use the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. There's a library of webinars so you can see this process. A lot of documentation in the sense of structured trades and a lot of work on trade plans. It's a community effort. Trader Lab and trading this process is, I don't use indicators, doesn't mean you can't, but if you don't understand how the market works, then you're just chasing the market around with indicators. If you understand how markets work, you might be able to better deploy an indicator to support the condition of the market, not use an indicator to do the work for you. If it was that simple, every retail trader who's using indicators and timeframes would be successful. And for some reason, most of them aren't, over 90%. I'm going to suggest if you're doing what other retail traders do, it might not be realistic to expect a different outcome. And of course, you may be special, but there's something I think to understand about why other traders fail. And if you're not successful, in spite of winning trades, you're caught in the random distribution of outcomes, but potentially not trading with a statistical edge. That doesn't work. Notice. What do we notice? Sellers. See them? So, can you use this process? Now, I'm not saying it's good. I'm just saying it is. It is a process. The thing to know is the possibilities. if this is now too high, I can come back here. If it's not too high, I might only come out and pick stops off under here. And they were absorbed. So I've got buyers are here. So you know, buyers were here, absorption, 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 stops under the swings. If I fall out of here, then I can go here and here and back here. Let me turn some couple switches here, and let me see if I can get investor RT to percolate and throw some levels on here for us so we could kind of see what's going on. Takes a moment from the come on. And I might have to adjust them a little bit. What you're going to see is high volume nodes, which are going to mark these high volume edges, and low volume nodes that are going to show you these outside edges. And if this is a distribution of volume, the outside edge, which is down here, is where the stops are going to be, which is under here. So if it comes outside, theoretically, potentially it would be mean reversion longs. So we have the possibility to come out here, come back there to the high volume node, or fall out, take the stops, and keep going down to VPOC, which is this one. So I know that if I have to fall out of this to come down here. If I don't fall out of this, then it's mean reversion for long continuation trades. So that's the process. Now we have to see what it does. Hope you guys are getting something out of this. Whoops. Gotta click another little something here. Okay. Now we should get the rest of our levels. You guys have questions? How are we doing in YouTube? Everybody conscious? I think if you're trading the SPY, which has different market makers and liquidity levels, you would use the SPY. If you want, you can have them both up there. But if you're trading SPY and you're trading options, you're in really a different time frame, pretty much, depending on the swings you trade. I mean, at the moment, there's no reason not to be long if you're trading a higher time frame, or you could be done with the longs if you got long this morning. I mean, that would be a pretty nice trade, I think, if you bought SPYs. Ben, do I use CHVNs, CLVNs? I do, but they're not relevant here because I'm trading inside of previous RTH sessions, which is where this comes from. And then I'm trading inside of intermediate time frame, which is where this high volume came from. Let's see if I can do this. Maybe not. So this is yesterday. And this 5300 is that micro composite volume point of control. And these 2 days, so Wednesday and Thursday, the retail price was like 53.24, which we are now trading at. Now we can take this high out. We can do anything. All right. So we have to see if we get up here or if we're pretty much going to fizzle out over here. That part's not my job. I can't know, so I don't try to know. My trade, though, was primarily to come here and here. So I can be done for the day. It just doesn't matter. I mean, that's just the way I operate it. I get to high probability targets, and if it keeps going, then it's not my trade. I'm just here to trade my plan. You know, this is where these levels are coming from. Okay, that's where we broke out, and I treated this as one day because that day filled in this day. So we had our targets down here, if you remember, and down here, and we almost got, we got down to pretty close to that one, and now we're back up here. So that's the trade. And then this was the gap, which we filled, and this is the next target up here. And we're over it now. So for the moment, nada, zippo. That's that target. So now we're moving towards the other side, and the stops are sitting up in here now, which would be over that inside day that we had on Thursday. So that's it. So let's look at this. Sellers were here, buyers are here, outside edge, and here we had a sweep. We get a sweep here. Now here this is resistance, but we hold support. See the change? Buyers showed up over here. Test, break high. So there's nothing here. If you're counter trend trading, this is not, like I say, I have no shorts. If we fell out down here and took the stops, then we could have come back here. But what's the condition of the market? Up, no shorts, right? That's why when you counter trend trade, you really need to understand the condition of the market. And here's the other part about this. It doesn't mean that this wouldn't go there. It just means you're counter trend trading. So what is the probability in your trade plan when you have this kind of context in a short squeeze? Do you have an edge trying to trade this? You see, I don't trade this. I just go, somebody else can trade it. And I always say, more power to them. But I know for me, my best trades are trading with the strong advancing team. And right now, the shorts are getting squeezed and the advancing side is the buyers. And it will change back again. Once we come up somewhere, we're going to attract our sellers again. And then the buyers are the ones who get pushed out. And that's what creates our rotations in all time frames, or fractals, if you will. So we're trading inside of higher time frames. But what's the trend? Overall, it's down. But what happens if the market gets short? It goes up. What happens after it goes up? It goes down. I know you're going, boy, this is brilliant. But you know what? That's market mechanics. Market goes down, it squeezes. If we're squeezing and it's not new buyers, and it's a mix of both, if we run out of buyers and we get exhaustion, what happens to the sell stops that are trailing all those buyers? That's what takes us the other way. So we have to have a plan, and we have to try to get in alignment, and we have to also accept that we're not going to always be in alignment. We're going to take stops because that's overhead and cost of production, and we got to try to stay calm about it and release the emotional need to be right and then predict, because it's not part of our business. It's our emotional needs that dictate that we behave a certain way, but it has nothing to do with trading. Our emotional needs are to be right, to get approval, of course, to make dollars. But what does that have to do with trading? What is trading, by the way? Have you ever thought about it? Trading is the execution of a plan that has a statistical edge. And that means developing the ability to overcome your fear and your emotional triggers, your FOMO, all the crazy that goes on under the hood. That'll take you out of the business. I believe if you come to Trader Lab and you invest the time and become part of the community and you post, you ask questions, you post screenshots, you get involved, and you demand to get as much as you can from the environment so you can move your potential career forward, you have the potential to learn how to trade. Now, the other aspect of this, if you learn how to trade, which means only interacting when you have an edge and not making it up or responding to emotional stimulus, that is what trading is. It's gaming. So you only play games that have an edge that favor you. You don't make them up, and you don't interact when you don't have an edge. No matter what the market does, the market can go up. S&P can go up 300 points from here. If you don't have a trade, you're done, because that's what keeps you in the business. It's not outliers or random events or news catalysts. That's not really what we're doing. We're attempting to get in alignment when we have a statistical edge, and we don't want to interact when we don't have an edge. because now we're gambling. And if you want to gamble, I always say go to casino and be sure to get the cocktails and the ticket to the buffet. Gamblers don't stay in this business. They have a great time. They get a lot of adrenaline and dopamine because, oh, let me click the mouse, feels good. And then they're not in the business. So I think we can learn from that. So I'm only talking about me. Been there, done that. And I'm not saying this is appropriate for you. You have to vet this. But the Trader Lab's available. There's a link in the bottom of YouTube. There's no cost for Trader Lab community, but I'm going to tell you it's an advanced process. Actually, if you want to see some interesting stuff, and I always get asked, what about real-time narration? Well, they're kind of real-time, but yesterday I did, in the day before, I did some very serious real-time narration with structured trades. Also, in the Trader Lab, in the library of webinars, there's real-time narration up to 5 hours long, a number of 4 and 5 hour streams where you could just see the good, the bad, and the ugly. You just see it. And everybody takes stops. If you don't take stops, come to Trader Lab, show us how to do it. But stops are overhead and costs of production. So it's part of the business, you know. And you know how you feel personally wounded? Let me ask you something. When the casinos write out a check or give somebody a suitcase of cash because they won at the table, does the dealer get fired? Does the dealer make up a new game? No, the dealer plays the game exactly the same way on the next hand. Because even though they pay the gamblers, they know the only way to extract dollars over time in a 100% random environment is to play the game with anchored inputs. In other words, they're not putting variables in there. You cannot replicate variables. You can replicate and measure consistent application of processes. That's really what the business is. So the casinos play their games with a consistent application of specific processes and inputs. That's how they get their edge. They don't get it any other way. So maybe we should emulate a successful business model. And that's what I've done. And that's what Trader Lab is. And the only reason I've done it is because I did everything else and it didn't work. And even though it worked, everybody has winning trades, guys. So don't be fooled by winning trades. Everybody has them. If you had nothing and you threw a dart at the board or use a magic 8-ball and you said, should I get long or short? You'll either say ask again or you'll say, should I get long? It goes yes. And then you push the buy button. You're going to have winning trades. What does that tell you about randomness? Or even if you had a random buy-sell generator, you just get to push the button. You don't even select buy-sell. You're still going to have winning trades. That solves the thing about, to me, randomness. So if you can have winning trades completely randomly, but because you have winning trades, you think you just have to make it better because you're seeing patterns and indicators and all this stuff. But if it's inconsistent in the application of the inputs, old saying from early computer days, garbage in, garbage out. Casinos are not using variables in how they play blackjack. They play it exactly the same way. So they pay the gamblers, or if the gamblers pays the house, they deal the next hand exactly the same way. In their anchored inputs, it's exactly the same. The only way they know that they can get their edge extracted. They don't know which hand, if, when. They don't know anything. They do know if they keep playing the game, dollars are going to flow across the table from the gamblers. This is the business we're in my opinion. You don't have to accept that. But if you've been waking up with Trader Groundhog Day, I hope you'll take a moment and think about why. For me, it was many years of waking up with Trader Groundhog Day, including building trading systems to try to solve the problem. You know, I did walk forward testing, optimization, loads of great statistics, but you can't look backwards and put the market in a box. The market's dynamic. It's a constant process of trying to evaluate pricing. What's too high, what's too low, what's retail. And right now, too low. Where's support? Right now, it's here. What do we know now? We have a new auction up here. Outside edge is out here. Low volume node. This now might be too low. Too low. Support potentially is here. Outside edge is here. I don't trade these little ranges because my resistance is right there. What am I going to do? Buy this? I can't. If I pull further outside, then I might do a continuation long and mean reversion in alignment with the trend, which is up. So I don't have initiative trades here because I don't have an edge. For me to get involved, it has to come out, take some stops, throw some under the bus, some of these guys, and then if I have a location, then I can take a long continuation trade and I have another level up here. But if I don't have a trade, I just don't, it doesn't matter to me. Remember, no FOMO. The emotional side that's speaking in your head, I call that the lunatic. Jekyll and Hyde. You know, Dr. Jekyll, have you heard the story? And Hyde? It's kind of like the Incredible Hulk, if you heard that story. You know, Bruce Banner. You know, he was a scientist. It's based on the same story. And then he unleashed this emotional being called the Hulk that would get angry and it wasn't a good thing. Well, if we get FOMO, we respond in the same way. Our emotions overtake us and logic and common sense go out the window. We're in a fight and flight response mechanism and it's primal wiring. So you will be triggered. Now I find, and you do too, that Hyde is very good in hindsight. You should have bought that. Or if this is the high of the day and it comes down and fails, you should have got out there. Oh, it held this. The buyers are here. You should have bought this. The buyers are above the sellers. It's a continuation trade. But if it fails, good thing you didn't. Or you should have sold this if it fails. Or you should have bought that. You see? Hindsight. That self-talk is the lunatic under the hood. You have to ignore it. If the market goes up from here, which it can, nobody knows, then the self-talk's going to say, I knew it was going to go up. So next time, when you have no basis for a trade, you're going to take it because Hyde is running the show, not you. That's kind of the shortcut to go out of the business because it's got to be intentional. If you're in Trader Lab, you're going to know where your next trade is. Now, you don't know what's going to happen. I know where my next trade might be. It's going to be here and here, outside edge. Now, if I fall out of here, I've got nothing to do. Then I might come down here. I have nothing to do. So let's watch behavior. I'm going to show you some stuff. Now, these are not structured trades. These are just curiosities for you to observe. If my sellers were here and my buyers took over and my stops are under here and I get my 63 stops and this is my outside edge, where's my resistance? It's right there. Let's see if it comes from here to here. Now, it doesn't have to. It can come down. It could do anything, right? Can we all agree the market is random and it can do anything? Please give a like, by the way, if you're visiting in YouTube. Also, subscribe if you're interested in streams like this. Trader Lab's available to you at no cost if you're inclined. It's a serious community of like-minded traders. It takes a team to do this. There's data mining, research, a lot of interaction and activity. We have our buyers here. We got to sell iceberg up here. And these buyers absorb these sellers. So either if the buyers absorb this guy, then this is our target. If the sellers overwhelm these buyers, remember, support is here. So we got support, outside edge, and if we come up here, it's called mean reversion. If we don't come up here, then c'est la guerre. Let's see. So what's interesting about this is the auction. And what the auction tends to do is go, what's too low? What's too high? What's retail? Remember the function of the market. And all fractals and time frames. What's too high? What's too low? We don't know where too low is. Maybe out in here. Where's the stops? You got to always look left. The buyers took over from the sellers here. So what we want to do is see if the buyers come back in. This is our outside edge. If they come back in, you're looking for this. If they don't come back in, then you put your parachute on and hit the canopy and blow it off. So, and out you go. Very important what happens in here. Let's watch. This is how the auction tends to work, but there's nothing predictive in it. It's location based. Remember, if we get our buyers, this is where we're headed. Not a recommendation. Now, if you were to get long, this is where you would be leaning, and there's no precision. Our sellers were here, our buyers were here. This is absorption. This is our location-ish, and we got to see if our buyers can get back here, or if these guys fail. Now let's go back. Where's our stops? There, and the buyers took over here. So I have buyers in here. So line on a chart is not material. Material is areas of potential behavior, and I got to look left to see where my stops are. If I get my sellers and they're absorbed like this, that seller was, and the sellers in here, then the possibility is they'll come back in here. And you could see there's a little struggle going on here. I've got my buyers here, and if my buyers can get above this guy and this guy, then here. If they fail, then we can just fall out. That's it. That's as deep as it is. So let's see what it does. We'll hang out together. I hope this is making some sense. These are not trade recommendations. Everybody takes stops. Part of the thrill. You can see the little fight going on here. Sellers are here. Buyers are here. Sellers got below the buyers. We got to see right here if these guys get absorbed. So let's watch. They have to recapture this or we're going down. Naked VPOC is also an important level. So if you took this, you would take a stop under here. Not a big deal if that's your trade. Let's look a little further down here. So if we're under this, we're below this, which was our target for any long, this HVN, I should say. We're falling outside of this distribution, then we are rejecting this. Now we have another distribution, and we can come back here or stop in this area. So let's see the next high volume area is in here. We'll watch it. I have nothing to do here. I'm just sitting here now. So now we have sellers up here. It's just longs. We have stops in this leg, and there's really nothing here. What we do know is we're falling out of these distributions, and we're getting below this. So we can come back all the way back here. So we'll see what it does. You guys have questions, post them. Remember, if you're visiting in YouTube, the Trader Lab is available to you. There's no cost. Buyers were here. These guys are absorbed. I don't have a trade. I just go, well, I don't have a trade. It doesn't matter to me. I'm not here to be busy. I'm here to wait for locations. It's already been a rather nice morning. So I'm not here to try to make trades. I'm here to try to look at structure. So this is nothing, okay? I mean, all we're doing is we're coming outside and chances are we're just going to, revert. But this is nothing. Market is long. There's stops under here, really. This is news based. We can come back all the way down here. It's possible that we eventually come here. It's not a trade recommendation. The news was down here. And if this is all a function of news, then we may come back down here. It's not a recommendation. And it doesn't have to. And it doesn't matter. Remember, when you're sitting here, you're not an hourly worker that has to produce something. You are in a casino, and your job is to play the games that have an edge. And if you don't have an edge or a game for this, then you don't do anything. If you're just clicking the mouse and making it up, I think it's going to go here. No, it might do that. Then you're going to hurt yourself, in my opinion, unless you have an edge. Unless you go, I know this trade, and I know that there's going to be stops under here, and I know that the buyers were active here, and if I come down and take stops, I can get a rotation. If that's a vetted trade for you, then that's your trade. I don't have one here, so I don't do anything with this. I just go, well, that's interesting. Because for me, I trade something called mean reversion, which is outside in trading. Now, we got outside here, but we didn't get outside far enough for me. It needs to be out here for me to take a long to come back to the high volume. So that's what the mean is. High volume is the mean. So outside in. I didn't get outside far enough. I don't have a trade, so I just hang out. Might put you to sleep, but that's business of trading. So if you, now this here, let me show you this. Now, I can't pick the high of the day, right? So it's not my thing. This, if you were fading, this sets up a counter rotation and you would be stuffed. Here, you see some heavy selling and we come back with a sweep and you have microstructure up here. Let me just show it to you. This is a counter trend short. I don't take it. I don't even talk about it. But I'm going to show it to you. But why? Let me show you the why. And this is just something you would do through a lot of research and repetitiveness. If you look here, this is an auction. Too high, too low, retail. There's the high volume. It's right there. The sellers take over. That's a trigger. Now, where's the entry? It's actually there. Why? Reject this auction. And I don't do the short, okay? I don't do it. I come back here and I have my sweep. This is a structured counter trend trade, which again, it's not my thing. And then, because with this, if this little auction is too high, that tells you that we might rotate and do this one. If we fall out of this, then we come down here. If we fall out of this, then we come down here. If we fall out of this, then we can come down here. Not my trade. But if you're a counter trend trader, but again, my skill is not this, because you might take this one and take a stop. You might take this and take a stop. How many stops might you take to try to get on a trade that might only go here? See? So again, I don't do it. There's too many trades, in my opinion, that have an edge, and this does not have a good edge. So it's not my trade. It might be yours, but you have to vet it. So if you have this trade, where would you be targeting? Well, it seems like a long way to go, I'll tell you, but this is where, right here. But you have to get under all this. So you might only come out here, or I mean, I don't know, right? Nobody knows. We got 5,300. That's our intermediate time frame, VPOC, and in the developing time frame, the current high volume is sitting here. So if this moves up, this will be the new retail price. If it stays down here, we can revert back to it, and that's reversion trading. So we are trading reversion. So continuation longs from outside in are mean reversion longs. This is a reversion back to here, would be a reversion short. That's all I can tell you. Do you want to take the shorts? Up to you. Do you want to wait for the longs? Up for you. Do you want to be in park? Up to you. And it's your trade plan. It's not what happens here. It's your plan. So when you come to the market, if you're in Trader Lab, your job is just bring your plan with you, sit down and go, okay, where's my trade? And then when it shows up, you put your trade on. If you don't have a trade here, you just sit and wait for your next trade. And if you don't have a next trade, you might be done. Or you just sit all day and you wait for it. That's the business. How are you guys doing? You following? If you're looking for action, probably not. Trader Lab's probably not for you if you want the adrenaline kick, and the dopamine fix. Trader Lab's about the business and just interacting when you have an edge. Might be boring, but I'll tell you, it can be very profitable if you do the work. And I sometimes think we forget what we're doing here. We're trying to create sustainability, and we're trying to organize ourselves and understand why retail traders fail, and also not do what they do, but anticipate the behavior. If we anticipate their behavior, it creates edge. How do you anticipate behavior? Just think of your own behavior. Most retail traders are like, no offense, lemmings, and they do the same thing. Um, so if we understand their behavior, which means understanding our behavior, that can give us an edge because we understand what most traders will do. We understand where they put their stops, and we understand the behavior that we can anticipate based on their behavior. If the market was short yesterday, what does that do for today? We go up, squeeze them out. But what happens if we go up, squeeze out the shorts, and then we run out of buyers? We go down. Market mechanics. Now, the thing is, where's the high of the day? We have no clue, only in hindsight. Where's the next target down here? We have this outside edge, and if we got a long rotation, it would bring us back here. Or this whole squeeze is over, and maybe we're just going to go south of the border. So we have a sell sweep here, which gives us a little counter rotation potential. High volume is here. That's your resistance. Uh, I don't see anything compelling me for longs at all. So I don't have, doesn't mean it won't go up. It's not my job. Where's my stops? They're sitting under here and here. So where's the probabilities? Here and then down. Let's see what it does. Not trade recommendations. What are we doing? What did we do? Broke low, tested, broke, too high. What is this? That's what it is, not a recommendation. So are you guys getting long, or are you getting short, or are you got the gun in the holster? If you're getting long, there's no trade for a long. So in case you're doing that, you need to get to your trade plan and understand the context and why the market is now rolling down. Peppy, that's for you. Not a recommendation, Peppy, follow your plan. So how we doing, guys? How we doing in YouTube? Please give a like. Today's kind of calm. Yesterday was, wear a helmet and a flak jacket and trade. And those are the kinds of days that make your week, make your month. Today also had tremendous potential. And in Trader Lab, you would have taken advantage of it. If you start getting into this, you could take a bunch of stops and cut your potential in half or 30% of your gains, because now you're hyped up, you think you've got the groove, and you chop yourself up. That's retail trader behavior. That's also what amateurs do, and we all have done it, and some of us still do it, and we're human, and we still do it in spite of everything we know. Just the way it is. But you need conditional statements. If this, then that. If not, then what? If the market's short, if this, and we open higher, and that, longs. If we come up to a level, and we don't know where it is, but these were our targets for the day, remember? Here and here. Now, this is like a direct hit, and it doesn't mean we won't make a new high. Depending on where the volume point of control is, as we progress, we might make a new high. Right now, the volume point of control, if I can find it, is here. So the possibility is to come back here to the VWAP in the mid, or hold an outside edge, and nobody knows, and mean revert back here. Those are the possibilities, you see. But in order to do mean reversion, for me, this is what I'm interested in. This. Why? Get the stops out. If the weak buyers are in this leg, then why would I want to buy it anywhere else until the seller's stops got taken out? And where might that happen? In here. 256 stops, one. This is called stop divergence. It's the only thing I use from indicator world. It's divergence. If I have stops coming out and I get liquidity comes in the book, buy icebergs, less stops, sellers are here, buyers get above. Now, this is not actionable for me. It's got location, but look what it does. It runs away. So and this would be the scale. No trade for me. Just doesn't work for me because I don't have a trigger. In other words, this is my trigger, but the only way I can get into it is if I get a rotation back here. I'm going to put a little box around this just in case. You got some pieces here, but not enough. So liquidity comes in, break high. No retracement, no entry. Resistance is here. This is your scale. So this is called mean reversion, but no trade. Close, no cigar. But this is important. In this behavior, what you're looking for, remember, over here, I'm looking for the stops. That's rotation. We come back out. Where do we go? I'm looking for the stops. I'm looking for the stops. I'm looking for the stops. I had a sweep here, which brought my buying. And now I have this. So this is my long, no entry. I just want you to see it. If I have a trigger, this is a trigger, but it has to retrace out here. No bueno, no trado. That's part of the business. You go, what I do when I see this, I go, oh, that's interesting. And I say that to myself because I understand how the market works. If I don't get what I require, in other words, timely entry, a structure where I can have my stop below here, enter one tick above there, if I'm not using order flow. And even with the order flow, it just ran away. I have no risk reward. And then I have this. So I have to be able to get into this thing, have my stop under there, get scaled here, because what it is, it's mean reversion. So we talk about mean reversion. It's outside in, and then the potential is to come out here. Now, the volume is increasing up here. So I'm anticipating what's called VPOC migration. That sets up the potential to continue and test this high potentially later on today, or not at all. It's not a recommendation. This is based on statistics and data mining in the Trader Lab. And again, you have to vet everything for yourself and formulate a trade plan. Are you guys following? The level sidebar. Yeah, JTrade. My Bookmap settings are available in the Trader Lab. You can just ask in there and somebody will direct you to them. Bookmap settings are something, there's so many tools in Bookmap. I mean, it's really an amazing tool. But for me, I'm a minimalist. So most of us, depending on where we are, we want more because we're looking for confirmation. I'm at the other extreme. I want less because I don't want conflict. What's better? Variable inputs you can't quantify and extract an edge, or anchored inputs where it's always the same. So I'm a minimalist, but you can get that in the Trader Lab. Guys, if you're visiting in YouTube, I invite you all to the Bookmap Discord Trader Lab community. This is what it looks like. There's a library of webinars you can take advantage of. Tons of information, documents, market structure, opening context alignment, those 60 structured trades, understanding mental obstacles, and a lot more. And it's all available at no cost. Please give a like if you're visiting in YouTube. Subscribe to the channel. Visit the Trader Lab community. There is no cost. And I look forward to seeing you all tomorrow. Thanks for visiting the Trader Lab. Look forward to seeing you tomorrow.